So everybody, this is basically part of a due diligence video. And what we want to look at is figuring out what the difference between an allocator or an operator is. We spent a lot of time on this because it deals with the corporate culture. So when we think of an allocator, that's someone that's allocating to real estate. It's typically a big financial firm that has determined that not only should they do private equity and private credit, but they should also do real estate, private real estate. So they hire really smart people to manage their real estate portfolios. And along comes investment opportunities that the really smart person or team analyzes in such a way that they invest in diversified portfolios in the right markets, perhaps in trending asset classes, all the smart things that smart people do. But those are typically what we call allocators, which is very different from an operator. An operator still has to make the same decisions in terms of what should we invest in, but they come at it from a different perspective. For the most part, allocators and operators are different. An operator typically doesn't have a private equity side to the business. They typically don't have a private credit side to the business. They're just real estate. And for the most part, they're just equity real estate. They're not out there putting mortgages in their REIT. They're buying real estate, real estate, real estate. And their DNA, for the last 50, 100, 150 years has been that of an operator, meaning they have developed properties, they buy the land, they lease it out, they're on site, they do the repairs, they sell it, they do everything. They know real estate. And those people are operators. And what you'll find is, now we at Sera Capital have a bit of a bias towards operators because we actually believe that operators can add value in the equity part of the real estate. We don't dismiss allocators, however, because there's something fantastic about having a allocator that basically says, hey, equity real estate is just, the cap rates aren't there, prices are too high. We're going to become a little bit more conservative in our portfolio. We're going to get involved in high quality loans instead. We're going to do some smart things internally so that since we believe that real estate is expensive, when it goes down, we're not going to get hit as badly. So there's room for both. And it's imperative from our perspective in terms of the culture when we're creating a portfolio for our clients is that if someone, let's say, has, $2 million and we're recommending 4 DST to REIT investments for them, we will be very certain to make sure we mix allocators with operators. We kind of think that over a 20, 30 year period, an operator will outperform an allocator, but we're not sure. Okay. So corporate culture is very important to us, and it should be to you. So always remember, if you're looking around, hey, what's your DNA? Are you an allocator or are you an operator? Thank you.